Let me show you exactly how to restructure from the 4-hour down to the 5-minute chart. Watch closely, this is how clear, repeatable entries are spotted. The first thing I'm going to do is go through the actual structure, mapping this chart up so you can see how we read that structure approach, and then how we'll actually apply this to the lower time frame later in this video to capture those trades. What you're about to see is the exact structure process traders master inside my 90-day program, and it works on any market, any time frame. So what I'm going to do, I'm going to start from this high as a potential break of structure to the upside. Let's mark this off as a BOS. Now the BOS basically stands for break of structure. Now the main important aspect that I always do whenever I'm doing my own analysis is I want to find the current trading range that we're in on the higher time frame. The way we do this is we're going to mark off a current high and low to form that trading range, and this is where the actual structure process comes in. Now don't worry if you're not sure how I'm marking these highs and lows as we go through, because the next video coming up will go through step by step exactly how to actually apply this type of structure. So do keep watching to the end and watch that video next. Once we get the actual trading range, now the trading range is going to be from this current high to this low. In this example, you can see that price does pull back, and the idea of the trading range, when we're in a bullish market, you're looking for that pullback to your area of interest to take another buy, to go pro trend, to run the week high. That's exactly what happens here. I'm not going to walk through how you could have taken this trade, but just to show you the process of understanding your trading range. So at this point is where we do get another break of structure. So following the structure is key. Now the breakout is only when we see a valid candle closing through. So this candle is a valid close through, a body candle close. We do not want to see a wick. We want to see a candle body close. Once we've seen that, we can move our new low to here, and this becomes our new high. Now this is what we class as a weak high and a strong low in the market. Now at this point, the market does pull back, but we failed to continue to run higher and we shift back bearish. Again, we can see, we mark it off this candle. It's a body candle closing through that low. That is then another shift in structure bearish. Now this is showing you how to apply that market structure. This is our higher time frame perspective here. Once we see this breakout, we're going to mark off our new high. There's our new current high in the market. We are now currently bearish with this market, but it all depends on your higher time frame, where we are inside those higher time frames compared to the actual 4-hour. What we're looking for is to trade the lower time frames with this 4-hour time frame. I'm going to show you the concept of understanding your trading range with internal and external liquidity when we're looking to take those entries. Right now, you're seeing prices shifting bearish. That is key. Now, potentially the best days to trade are going to be midweek. So we're talking about a Tuesday, a Wednesday, and a Thursday. And let me share why. Now, there's a saying that we have Monday's retracement, Tuesday's continuation. So that's why I find Mondays can be very slow to trade, and very often you can capture losing trades on a Monday. Now, on a Friday, I don't like to trade, mainly because I don't like to hold trades over the weekend. So for me, trading on a Tuesday, Wednesday, or Thursdays are my preferred days. Right now, we're on a Friday. So from this point, I would be waiting until I get a valid setup come Tuesday. So we're going to reprice from here. We're going to go through the playback mode, and I'll show you step by step applying the structure, and then we'll actually look to take an entry on a lower time frame. So we're going to go through. I'm going to demonstrate now. We want to find a valid low. Now this candle closing up creates a valid low. So you may be able to see how I can start to mark out the highs and lows. If you're not fully sure, do watch the next video, because there is a process that we use to map this out. So from here is where we can look for price to potentially pull back, continue lower, or we can potentially shift back bullish, mainly because this is a very small trading range. And there's ways we can look at this using the approach of lower time frames. So right now We are still in a Friday, so I'm still waiting. I'm not going to trade this day. Remember, we don't trade the Friday. Let's go forward with some price action here. Okay, so we get a quick push to the upside. That's a strong indication of a new break of structure. And this now gives me a potential bullish bias once again on this market. So as soon as we see that as a break of structure, this becomes a new high and new low. So now we have a new trading range from this high to this low. And we're looking for price to pull back, potentially continue higher for this week high. There is a big bullish candle here. And what this is going to leave us is what we call an area of imbalance. And there's a way that I teach and share inside the 90-day program exactly how we look at trading imbalances and how we can use it not only for potential bias in the market and for taking entries, but also for targets. But if you want more clarity on your structure and how we use those imbalances, we have just actually opened up 6 new places to enroll for the 90-day program. It is limited to just 6. They will go fast. If you want to check it out, there's a link in the description of this video. So from this point, that's where I'm going to be asking myself, if the market cannot hold here, we could potentially run this low for external liquidity. We have no more internal liquidity, so potentially we could run this low. Now we could also hold here, and it's key to understanding your lower time frames where we could continue higher as well in the market. But this is where we're going to follow price. Now currently, let's look at this current time of day. We're now on Monday, and now we're going into Tuesday. So we're now just open to Tuesday. This is my window where we can start to look for potential trades. We are holding within this candle, but we also have an area of imbalance here which can hold price and push to downside. We've also just created some liquidity. So let me just mark this off as liquidity on the 4-hour. And what this could actually be, we could want to run this liquidity before dropping lower to take more internal liquidity just created here. And that is how you can start to read those markets when you're inside a trading range. So let me go through a candle by candle approach. We've just run through that high. And we'll continue forward with a few more candles. Time of day. Now we are on Wednesday morning. And this is where we've just seen a sweep of this high. We could now run this internal liquidity to run lower and potentially take this strong low here on this move. Now, as long as we don't close through this level, we can still see a bounce higher from here, even running for this week high again. But a close through suggests another shift in structure. Go forward a candle from this point, and we get a wick through. Notice at this point, we are bullish. We've only swept this low and closed back inside. Unless we see a valid close through, we are not interested in selling or seeing a reversal of structure. Right now, we're looking still for that pro trend to go to the upside to this area. Internally, we also have this high created. I'll mark it out as an area of liquidity. So what we could potentially see is the market may want to bounce from here to run this high before running lower, or even continue up to this high. That is what my thought process would now be reading these candlesticks. We've taken the liquidity to the upside. We've taken it to the downside in this internal area. We've now taken the strong low and we've swept it. So what I'm going to do now is drop down to a 5-minute time frame where you can start to read the lower time frames and as we look for a reversal back to the upside. Now, when I'm looking at this, for a main swing structure, I would have to see this high being run. So I'm going to mark this out as a solid level. Now, I don't have an internal structure here I can mark, so let's go forward a few candles. Right, now we're having a pullback. This becomes an internal structure. So right now, I'm looking for this to be broken. And the market continues down. And we've taken the low. So internally now, just like we saw on the 4-hour, we had that swing move and we had the internal areas. We now have, this is a swing move down. And we have this now as a new internal high. So I'll be looking for price to run this to show me the intent to start going higher. So let's see if we can run. And we do. We break structure. So the key point now is understanding that this is a potential target long term. Right now, we are only showing a potential intent to go higher, but I do have a new area of demand that I can now mark out. Now, it's not an area I'm going to take a buy from at this moment, but understanding that the market is already showing us a potential shift to the upside internally shows me that we can start to see a pullback towards this area. So this is how you can start reading the higher time frame narrative, showing that we're holding at this area on this low, potentially go to the upside. I'll go back to the 4-hour time frame. You can now see that we have another push down, taking this low, even on a 4-hour candle, and holding and closing back above this level. That reinforces it even more that we're just grabbing liquidity below this strong low. And we're likely to see a push to the upside from here. So back on that 5 minute, this is now where I'm going to read my potential reversal. So what I'm looking for and expecting, we could see a pullback to run this low into this area of demand for buy here to the upside. Now, I'm not taking this as a trade right now. What I'm just looking for is another continuation to show me the market is shifting bullish internally and we should run towards this high next. Let's just play this out a few more candles. Okay, so now we can see we've actually swept this low. We brought in some more buys, pushed back and swept that low. But the important part here for me, we didn't go into the area of demand. That means it's still an untested zone and we could see price want to come back. But we're now looking to see if we can run this high because we now have an internal break, one, potential, another break to the upside, show me a continuation. So once I can start to see that continuation, we can start to look for potential buys. Now, if I go forward a few more candles, we're pulling back again towards this low. So what we're now starting to create is internal liquidity inside here. And what we've got is some equal lows. So we're below this low. I'm going to just change this now. Let's add this. I will place this to the bottom. We'll make it nice and big. We have lots of built up liquidity below those equal lows. So now let's see what happens from here. And we actually broke to the upside. So what we actually created is, again, this high and this high created some equal highs of liquidity. We ran that to the upside as well. This is also our weak high in the market. Just like we saw on the higher time frame on the 4-hour, this becomes a weak high. But now we've got all this liquidity below. That tells me we have this leftover demand sitting below these equal lows of liquidity. I have a potential first target we can look for is this high. And then a second target is this level here. And a final target, to find a final target, would be basically the 4-hour high, which I believe is going to be this high up here. So that is going to be the potential trade idea. And long term, we could still see a run all the way up to this high, understanding that we are still bullish on that higher time frame. So zooming back into this area, I would now be looking to take a buy, understanding the scenario here that the 4-hour has swept the external liquidity. We are still bullish. We're looking to go pro trend. In the back of my mind, we have this as an internal high on the 4-hour. It could be swept and we could drop lower. So that's why I'm going to look to get out of a trade at this high. But I'm looking for my entry is to take my liquidity to enter into this area, stop at the low. My first target is going to be this high. That's over a 4-hour trade. My second target is going to be this high. That's over 8-hour trade. And my final target on this one would be to run for this high, which is a 17-hour target. Now I will just double check this is the correct high, but that is how you can look at using the combination of your lower time frame to take your trade with the use of the higher time frame. What we've actually got here is a nice looking pattern that price is shifted out from that 4-hour low. We've shown the continuation is bullish. We've created this liquidity, good entry off an area of demand. So what I'm going to do from this point, before we go back to the 4-hour time frame, I'm going to play this out so you can see how this works and understand that we're looking to take our first target at this high because it's our internal weak high. This is then our strong high on the actual swing move, which would be for break to downside. Then we're looking for this to be shifted to the upside to show us we're likely to continue to this high. So if I just now play this for you, you can see how this actually plays out. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. Okay, we're on full speed. We'll play this off. So we just pause it there quickly. We've just taken this high straight away. So instantly, this puts you into a risk-free trade. Understanding. Now we'll also continue up to this high. And it's right here I'll be watching now to see if it holds. If we just sweep through, if we can push and close through. So let me just continue with applying this. And that's a strong push to the upside. So now I'd be at break even on this trade, understanding this, looking for potential pullbacks to continue higher for this level. So let's now play this forward as well. Let's drag this across. We're currently bullish. You've taken the first and second target, understanding this concept. We'll play it. Okay, so we've hit that final target we had marked off. You can see how this trade never came back towards after our entry. This is how you can pinpoint your trades with high accuracy once you understand to read those markets. This is exactly what we teach inside the 90-day program. You can start to fix your structure with clarity, find your entries with pinpoint precision, and start capturing these same types of trades. So right now, let's go back to the 4-hour time frame and let me just show you what the 4-hour was showing us. So yep, from that point after that candle, we had a higher low continuation pushing straight through this level. Then we continued up and we've taken this internal liquidity at this high. Now I did say at the beginning that potentially with these sort of moves, we could see a continuation, especially now we've actually closed this level. We could continue up to that level. Let's just see if this is a closed candle. It absolutely is. So now we could look for price to continue this high. Let's just go to playing this forward. And the market's going to currently price. So you can see this is a recent area to take a trade. We've continued to pull back into areas of imbalance, continue to push higher, and we're looking for this weak high to be run. Now, if you want to be able to apply this structure step by step, that's exactly what I teach in this video coming up. So watch this video now so you can see how to apply and map your charts using this structure from today.